Imagine waking up today to a silent shift in the global silver market. Nothing exploded, no alarms, yet something profound is happening while most investors slept. Today, January 26, 2026, marks a moment that could quietly change the silver market forever. If you want to stay ahead, hit like and subscribe now. Notifications ensure you never miss critical updates like this. Silver is one of those rare assets that usually goes unnoticed for years. Then, all at once, it demands attention. Over the past 48 hours, unusual activity has begun appearing in both physical and paper silver markets. This isn't hype. It's not speculation. This is real-world buying pressure, increasing silently. And it's not coming from casual traders chasing daily price swings. No, the pressure is coming from strategic buyers thinking long-term. When smart money moves, it moves quietly before everyone notices. Right now, that is exactly what is happening in silver markets. Physical silver supply is tightening globally. Dealers report higher premiums and intermittent stock shortages. These are warning signs. They often precede large market movements. Industrial demand continues to grow. Electronics, solar energy, electric vehicles, medical devices, and even military applications all consume silver. Meanwhile, mining output struggles to keep pace. Most silver comes as a byproduct of other metals, limiting supply flexibility. All these factors combined create a structural imbalance in the silver market. The pressure points, 12 to 15 paragraphs. The market today exists in two worlds. Paper silver contracts dominate trading screens, while physical silver is the metal people actually want. When these two worlds disconnect, price discovery becomes chaotic. Currently, we are seeing early signs of this disconnection. Inventory levels at major exchanges continue to fall even as delivery demand rises. This combination historically leads to sudden volatility. Not gradual movement, but sharp spikes. Confidence in delivery plays a bigger role than price itself. Markets react when trust fails. Investors start holding. Buyers rush. Sellers hesitate. Prices react disproportionately. That's why today's silver situation cannot be ignored. Institutional investors are quietly repositioning their portfolios toward physical metals. They do it strategically, not loudly, because moving late can be costly. Retail investors are now beginning to notice. Foot traffic at coin shops increases. Online stock gaps appear intermittently. Media remains mostly silent. But history shows whispers precede roars in precious metals markets. Industrial demand keeps building. Every new solar panel or EV uses more silver than ever. And with geopolitical tensions rising, strategic governments are securing physical silver quietly. This isn't about price speculation anymore. It's about availability. Section 3. Global financial context, 12-15 paragraphs. Financial markets today are fragile. Debt levels are high. Bond yields fluctuate unpredictably. Central banks face a difficult balancing act between inflation and economic slowdown. This environment pushes attention back toward tangible assets like silver. Gold usually reacts first. Silver follows, but with more extreme moves. History shows silver often lags early in a rally, then outperforms dramatically. That's why ignoring early signals can be dangerous. Institutions preparing quietly today will gain an advantage when volatility erupts. Meanwhile, retail sentiment remains cautious. Many still view silver as outdated or unnecessary. They underestimate its dual role: industrial metal and monetary asset. Silver reacts strongly when stress is high, unlike most other commodities. Geopolitical instability adds further pressure. Nations prioritize strategic materials during uncertain times. This increases industrial and investment demands simultaneously. What's critical now is understanding timing. Early positioning matters more than chasing headlines. Markets often move in disbelief, not during excitement. We are entering such a phase now. Section 4. Signs to watch, 12-15 paragraphs. Physical supply is low. Dealer premiums rise. Inventory gaps appear and disappear. Search interest in silver spikes. Coin shops see increased foot traffic. Global financial indicators suggest rising risk in bonds and fiat currencies. Investors are moving toward tangible assets as a hedge. Small moves today could trigger a larger reaction tomorrow. Understanding this early gives strategic advantage. Watch registered silver levels closely. Delivery demand is an early indicator of market stress. Institutional positioning hints at long-term confidence in hard assets. Retail hesitation can create sudden surges once momentum starts. Industrial usage continues uninterrupted. EVs, solar panels, electronics, and medical equipment drive long-term demand. Geopolitical shifts affect supply chains. Countries stockpile strategic metals. Price is no longer the primary concern. Availability is. These converging factors suggest silver could experience heightened volatility in coming days. Markets will surprise those unprepared. Timing matters more than ever. Section 5. What you should do. 12 to 15 paragraphs. Don't panic. The goal is awareness, not fear. Understand context. Markets react violently when signals are ignored. Stay informed. Keep monitoring inventory reports, industrial demand, and geopolitical news. If you own silver, review your physical holdings. Timing your next move may matter more than ever. Comment below with your opinion. Is silver undervalued today, or is this just temporary? Sharing this video can help others understand the silent pressure building in the market. Subscribe for regular updates. Missing one could mean missing critical positioning. Small shifts today could lead to big outcomes tomorrow. Remember, silver's biggest moves happen during stress, not calm. Markets rarely announce opportunities. Preparation is individual and quiet. We are at a pivotal stage where pressure points align. Understanding them gives you perspective. Stay alert, stay informed, stay ready, because the coming weeks could reshape the silver market dramatically.